Well, in the wake of the Reserve Bank's 0.5% rate rise yesterday, the biggest home lender, the Commonwealth Bank, is in the last few minutes has said it will pass the increase on in full to home borrowers. Business Editor Ross Greenwood joins us now. Ross, do the banks have really any other choice here?
Well, they probably don't in their own minds, but of course there's always competition that can get people better deals if they're actually looking to finance or refinance right now. If we go to the Commonwealth Bank this morning, it said its standard variable rate will rise by the full 0.5%. Now, the interesting part about this is it says it will go to 5.8%. You can see the investor loan is 6.38%. I should make a really important point here to people. That standard variable rate basically is, if you like, their rack rate. It's not the cheapest rate they will offer. In actual fact, their cheapest variable rate comes in at around about 3.3, 3.4%. So despite the fact that this looks alarmingly high, most borrowers should be able to and should be on a significantly better deal. If you're not, you should really be calling. But this really almost is a precedent in some ways for other banks to be able to also raise their interest rates by the full 0.5% that the Reserve Bank gave out last night. But it's also a significant cost. You can see here also that some of their savings rates, their key savings rates, will also rise again by the full 0.5%. There'd been criticism of banks that they had not passed on the full rate rises to savers in the last little while. So some of their key accounts, not all of their accounts, not their current accounts, if you like, the normal ones you keep your money in, but some of these key savings accounts will rise. And you can see here that interest rates are certainly significantly higher than what they were when they were close to zero. If we go and have a look at the impact of this 0.5% rise on mortgage borrowers, you can see here on a typical $750,000 loan, the impact now is about $200 a month. So in terms of really what's happening overall in regards of the increase in rates we've seen so far, that means that borrower is probably up for an extra $700 a month, given the fact that the Reserve Bank now in the past 3 months has raised rates by 1.35%. But then you go to fixed rate loans and you see the way in which the banks have actually raised rates there significantly higher. The Commonwealth, 6.39% for 3-year fixed rate loans. And so that means if you haven't been quick enough to get these rates when they were down in the threes, it really is way too late to try and protect yourself by using a fixed rate loan.
And Ross, the Reserve Bank raising interest rates puts pressure on the Australian economy. That's the point of this, to kill off growing inflation. And there's one sign today that it might actually be starting to work here.
It's the very first sign that we've seen. This is the latest job ads numbers coming out of SEEK. Now, SEEK today say that for the first time this year, the number of job ads it's seeing on its site have fallen. So fallen by 2.1%. But do also note that the actual job ads year on year are ahead by 23%. So that's very strong. The second thing is that the applications per job has dropped. Now, this is partly a result of so many people being in work. The unemployment rate of 3.9% is so low. And so what you seem to see is going on here is either A, that employers are starting to pull back just a little, or B, they're giving up because they simply can't get the people to fill the positions and they're having to find other ways to cope.
But that's not all here. Around the world, of course, central banks acknowledge that it is a delicate job to knock on the economy into recession.
Yes, and this is a really important point because last week, remember that the chair of the US Federal Reserve, Jerome Powell, had indicated that he would prefer to see an economic downturn, even a recession, rather than having long-term lingering inflation in the US economy. But overnight, the White House spokesperson was asked specifically as to whether the United States economy is in recession right now. Here's the response.
Do we believe we're in recession? No. That's my answer to you on that. So there is a nonpartisan data that came out recently, the National Bureau of Economic Research, which I'm sure you know very well, Ed. It determines and defines recession.
But in fact, you can see that the fear of recession in the United States and around the world right now is through oil prices, which last night at one stage were below $100 US a barrel. Not bad for the pump prices here potentially, but that is a sign in many ways that the world is fearing a recession right now.
It appears that way. Ross Greenwood, thank you.